What is going on, and welcome back to another video. If it is your first time here, my name is Brandon. As always, if you're looking for courses and training, we do have our Investing Academy, which is that first link down below. But today we're talking about the major news that was announced that Rogers is looking to acquire and take over the company Shaw. Now, this is a monster announcement here in the Canadian field, not only for investors, but also for consumers. I myself am a Rogers customer when it comes to the cell phone. They're my provider. I'm also a customer of Shaw when it comes to my cable and my Wi-Fi, my internet. So huge deal. In today's video, I want to share with you guys what we should look at just in general when there are these takeover announcements or these mergers. We are also going to talk about what to do if you own either of these shares, whether you're a Shaw shareholder or a Rogers shareholder, or even if you're just looking at what stock maybe you should buy. Is there going to be a buying opportunity? We're going to talk about all of that, and I'll share with you guys the thought process that I would go through whenever there's a merger or an acquisition like this. So as always, if you guys enjoy, take a moment to drop a big thumbs up on this video, because that totally does help. But let's just start off with going with an overview of the deal in case you weren't familiar. But Rogers is looking to acquire their rival Shaw. That's the fourth largest telecom company outside of the big three. On the announcement of this news, Shaw had a massive day, up 41.63%, finished trading at $33.85 per share. This is the Canadian ticker. As for Rogers, they finished the day up 3.39%, today trading at $61 per share. And just as a rule of thumb, typically when we do see mergers and we do see two companies involved in an acquisition, it's quite common that the company that is getting bought out, often the smaller company, this company sees a massive spike, a big kick up in the share price. As we'll actually look at in a second, Rogers is actually paying a nice premium on these shares. Investors are excited, as we saw today with Shaw. Typically, you do see the acquiring companies. So typically the bigger company that's going in and buying the smaller company, you do see that stock often sell off. There's often a bit of uncertainty. This is, of course, the company that's forking up a lot of cash, so investors aren't always too certain on what's going to happen. In this case, to see the shares up 3%, this does show somewhat of an optimistic sign that the market is actually kind of liking the deal. Now, as for the deal itself, Rogers will be looking to acquire Shaw for $20 billion, give or take. They will also be taking on about $6 billion of their current debt. The deal states that they'll be buying all outstanding shares, Class A, Class B, at $40.50 per share, which was paying a 69% premium, obviously before the stock kicked up today. Now, just to take a look at the size and scale of this potential deal, on the screen you're looking at the market cap of the big telecoms. What you'll note that is if this deal does go through, looking at today's current market capitalizations, if we combined the blue line, the baby blue line of Rogers and Shaw, this would actually propel Rogers up to the second largest company. They would still be behind Bell in terms of market cap, but they would exceed TELUS. So this is nonetheless a big deal. Now, I want to talk about, first of all, what you should do as an investor if you own Shaw stock. And this goes for really, I'm trying to teach the principles here, because this would go for any company that's being bought out and acquired and the things that you have to consider. But if you are a owner of Shaw, which I know a lot of people are, we actually covered this in the last video, reasons why you would sell a stock. There is clearly a fundamental change going on with this company. Now, in this case, because the deal is a cash deal, you will literally be getting cash for your shares. Another way that deals are often financed is that the acquiring company will often pay via stock. They'll use their actual equity within the company, and you may get shares of the acquiring company. In some mergers, you may even get shares of a brand new company. But in this case, due to the fact that you're not going to be actually holding a new company's shares, you're just getting the cash for it, this doesn't necessarily apply. But what I want you to consider is the reason why you invested in Shaw still going to be valid after this merger hypothetically takes place? The sad reality is that with a lot of mergers, it's quite common that if we looked at something like the corporate culture of the smaller company, or the values that they stand for, or the branding behind the business, it is very typical to see that kind of get absorbed and kind of washed away into the bigger acquiring company. So that's something you need to consider, whether this new company is still going to be one that you want to invest in. Another clear one that comes to mind in particular with Shaw, as we've touched on the channel before, this is one of the few companies in Canada and just in general that do pay a monthly dividend. I know Shaw shareholders love Shaw for that monthly dividend. Now the reality is Is Rogers going to give that same output? Rogers pays a quarterly dividend, and I see very little. There's no way that they're going to change that just because they're acquiring this company. These are just a couple of simple questions that I would be asking myself if I was a Shaw shareholder and trying to make that decision on whether I wanted to own the acquiring company, in this case, Rogers. Now, again, for this specific deal, this is an in-cash deal, so you can really go do whatever you want. But there may be many investors out there who say, wait, well, I want to now partake in this new company or the acquiring company, totally preferential. In my opinion, if I was a Shaw shareholder, and I say this, this is not investment advice, this is just my opinion here, always do your own research and due diligence, I would be heavily considering selling my shares before everything takes place. Now, why do I say that? Factoring in the few things that we just talked about, for one, but for two, there is also the very realistic possibility that this deal does end up falling through. Now, I don't think that's going to happen, but we saw a massive uptick in the share price. This is a great gain if you are currently owning shares of the stock. But if there were to be news that this doesn't get passed by the government or the Competition Bureau, et cetera, because this is such a major deal and it's really going to be under the spotlight, we do have to consider that in. We do have to factor that in. In my personal opinion, I do think that this deal has the strong potential to go through. Just on a side note, to me, this is really just strengthening Rogers as a company. There are two companies merging. They're all in the same field. And obviously, the government and these bureaus, they don't want companies to get too overpowered and too controlling. But if you look at the other three big players, or the other two big players, they're already massive in size. This is just, in my opinion, kind of strengthening Rogers' company, their reach, et cetera. That's just a personal opinion. But if I was a Shaw shareholder, that would be something I'd be really considering, because we do have to keep in mind there is the downside potential. If any news comes out that this deal is not going to go through, you can be certain that these shares are going to kind of drop back to probably where they were. Let's now talk about if you are a Rogers shareholder. And this is, I can speak from this because I am a Rogers shareholder. We need to ask ourselves whether this makes sense from a business perspective. Do we want this company acquiring the smaller company? Are they making a wise decision? Are they paying a fair price? I think it's a very clear overall motive in that the idea behind acquiring Bell is this is going to expand their reach. It's going to expand their reach across the country. Rogers in particular has a very strong, they're very apparent over on the East Coast. They have over 10 million customers. Shaw is actually a little more apparent on the West Coast with 7 million customers. This would create a huge company, as we well know. In particular, we do have the 5G rollout, and this is a massive step for the company to really get that reach. I think that's the overriding decision. Overall, just trying to compete better with the likes of TELUS and Bell. One of the byproducts of an acquisition or a merger is that when the companies do ultimately combine, you do get what are called synergies. This is a term in the investment space where basically, if you have two companies that do very similar things, in the case of what we have right now with Shaw and Rogers, there's no need to have two marketing teams and two separate headquarters and all different areas. Once these companies combined, you can actually cut down on costs, essentially combine forces, and over time that will actually benefit this new company. They're expecting synergies to be about $1 billion over the first couple of years, once of course this deal goes through. Now FYI, this deal I believe is set to take place, if everything goes well, not expected to close till 2022. So again, it's a good example as to there's a lot of time for things to potentially go wrong with this deal. It's just something to consider. Now, to look at it from a numbers perspective, if we looked at Rogers to see how are they going to finance this deal, they do not have a lot of cash on hand. In fact, it's been growing, which is nice, but we do see that only at $2.4 billion in short-term cash. If we look to the bottom of this balance sheet, we will notice that they already have $16.7 billion in debt. This will certainly be added here. In fact, on their investor relations page, it's already been stated that they do have the funding secured for the transaction. So it's more or less whether the regulators are going to be okay with this. Shaw, actually, from a shareholder's perspective, they're very for this vote, or they will be for the vote. To look at a couple financial health ratios, something to consider is that the telecom sector does typically operate with a decently high financial leverage. These multiples are up at 3, 4, you even see it as high as 5 times. But this is actually quite standard across the board. I follow the entire sector quite closely, and whether you're looking at TELUS, whether you're looking at Bell, or whether you're looking at Rogers, this is standard for these companies. So it's not necessarily a bad thing to be leveraged up. A lot of companies operate like this, and to tack on a little bit more money to the long-term debt, I think that this is a very, very manageable thing to do. I'm sure they've thought through this. To kind of summarize up this video, and again, this is coming from a perspective of a Rogers shareholder, so you can call it biased. I think that this is a good deal to kind of solidify the top 3 players. You kind of had the top 3, and then you had Shaw kind of lurking around there. I'd like to see that the government and the regulators just let this deal go through and just say, hey, keep it simple. We have 3 big powerhouses. It's an oligopoly. I did hear news that they're looking to, over the next few years, make them reduce their rates, because here in Canada, we have some of the highest rates. They're absolutely robbing us. They got their hand in our pocket. That may come down, but I say at least keep things simple with the 3 big players. That's a personal opinion. And although this is from a completely different sector, we look back to the deal that Disney took a couple years back when they bought out Fox for an insane amount of money just to boost their content library. You look at companies like Netflix, which are reinvesting in themselves, billions and billions of dollars in all these Netflix originals. This is the way that business works. You take on debt, especially right now when debt isn't necessarily expensive, you reinvest and you get out there. And especially in a critical time right now with the 5G rollout, I think that if Rogers can essentially, a big thing there, I forget the exact number off the top of my head, but I think they're planning to spend $2 or $3 billion specifically in building up their networks. This just helps get that customer base. It helps them get that reach. And I think that a very strong model these days is being able to grow the audience, get the customers under your belt, and then figure out how to monetize them. We see it time and time again with a ton of companies. So the fact that they're taking on a $20 billion debt load, or 26 technically, I don't think that's the end of the world. So in conclusion, what would I be doing as an investor? Well, would I be buying Shaw? That's the first easy one for me. To me, the answer is no. I would not be buying Shaw because I see more downside potential at this point after we saw a huge spike rather than upside. Again, we'll factor in that when this deal ultimately goes through, you lose the benefit of the monthly dividends. That's maybe a key reason why you invest in this stock. Would I invest in Rogers? Well, personally for me, if you recall, if you've been following with the channel, Rogers was one of my 2 stocks that I planned to buy in 2021. So I did a video where I talked about 2 companies that I needed to bump up, or actually I wanted to add Lockheed Martin, which I've done, and Rogers was another company which had been beaten down for me, and I haven't really I never found the right time. I think the stock has picked up a little bit, but this was still another stock for me. Morningstar actually still has the stock at a 10% discount as of today. So the play, in my opinion, clearly, if you do like Rogers as a company, would be to invest in the big player, invest in the big boy, rather than playing the Shaw, which would be in general a shorter term play. That's just my personal opinion. Of course, I'm all for the other companies. I've said that a number of times. I do like TELUS. I do like Bell. In fact, I own Bell as well. But that's just my overall thoughts on how to interpret all of these things that go on with a merger or acquisition. Although this was a specific case, a big case here in Canada, the principles that hopefully we talked about in this video can be applied to any merger and acquisition. You ask yourself, do you want to own shares of the acquiring company? You got to look at how the deal is done, factor in all the pros and cons, and then come up with your ultimate decision. But if it were me personally, I'd probably stick with Rogers. If I did own Shaw and I was able to partake in that nice juicy bump up, I wouldn't get greedy. This would be a clear time where the fundamentals have changed. This may be a very clear time to sell a stock, take those profits and run. But that's it for today's video, guys. If you enjoyed and learned something new, please do take a moment to drop a thumbs up. That helps the channel out so much. I'd love to hear your thoughts on this merger, either as an investor or even just as a consumer. I'm very curious to see how this will play out, being that, again, I am customers of both of these. If you're not already subscribed to the channel, take a moment to subscribe and hit the bell for notifications. We post videos like this every day. And also let me know, do you guys like these current events type of videos? I don't often do them, kind of just looking at what happened in the news, but hey, this was not difficult to do whatsoever. I'd be happy to chat about what's coming up if you guys enjoy them. So do let me know. As always, we do have our Investing Academy down below. If you are looking to get more knowledge in the stock market, whether that's just a beginner, whether you're looking to go to the next level, click the link down in the description below. You can learn all about that. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.